Andrew Brewer joins me, and you can learn what his team is up to by going to irongallinvestments.com, irongallinvestment.com. That is going to be a clickable link in the show notes. Really appreciate your time. And first of all, I got to ask, how did you come up with the business name?
Business name actually came from my wife. We were kind of brainstorming on what to call the business, and she had kind of, made this mention of like, well, what about, something like, Iron Gall, like Iron Gall Inc., that all these important documents are signed with. And, I was kind of like, oh, that's interesting. I was looking for something that, was a little catchier, that was a little more unique. There's lots of people that, kind of have the same similar kinds of stuff in their names, some kind of color, blue or black or something, and some kind of thing, some kind of stone or metal or, some kind of frightening animal, eagle or wolf or, something like that. And so I wanted something that was a little more off the beaten track, but that would, roll off of the tongue a little bit easier. That was a little catchy. And we were looking at, endings like, investments or capital or, something like that. And so we're kind of like, oh, Iron Gall and investments, and just kind of fit there. So yeah, that's kind of how we came up with it. All credit to her, though.
Sure. Well, some of this seems to be accidental occupations in a few aspects. How did you find your way into real estate investing? Give us the truncated version.
I guess it was somewhat intentional and somewhat accidental. I'd always been interested. Well, I won't say always. My wife got me interested in real estate investing. I had always kind of had this idea of, maybe trying to, do something like that, but never really thought it was possible. But she kind of turned me on to like, no, it's totally possible, even if you don't come from, family wealth or something like that, to, to buy properties. So I was always kind of interested in that. Never really knew how to do it though, but just kind of, started reading stuff and trying to see, what the best fit was. Like many people, I kind of started reading about, maybe buying some, single family properties or, duplexes or something. And then, just kind of, bought a few properties there, decided it wasn't really for me, started looking into other asset classes like mobile home parks and apartments and things like that. But at the same time, I was working as a stationary engineer in a large commercial facility, and then I was doing construction defect litigation work and basically asset management and engineering work on these large assets. And still trying to do stuff myself, and at a certain point, I just kind of mashed all of that together and said, well, what I really enjoy doing is real estate development. And, I have some experience in larger projects there, and I don't really like doing the smaller stuff. So, let me just be a real estate developer. And I just kind of went from there. So I guess intentional in getting into real estate, but more accidental in how I became a developer, I guess.
Mm-hmm. So talk a little bit about that. You started off with smaller multifamilies and worked your way up now to syndications?
I do some syndications, although at this point I'm not a huge fan of it. I mean, I like the legal structure, but not kind of in the basic, more public sense of syndications. A lot of the projects that I'm working on at this point have smaller ownership teams and doing more joint ventures. At this point, I'm working with a smaller core group of investors, the same partners, so I've that's kind of what I'm doing at this point. But yes, I worked my way up from just buying stuff myself to buying stuff with partners, and then I've kind of consolidated that group of partners, investors down to the ones that I know I can trust, the ones I know that will perform, and and folks that understand the space, understand what's involved, the risks involved, the timelines involved. I don't want anyone to ever be unhappy with their investment out of ignorance because I didn't quite understand what they were getting into. So I'm very careful about being very upfront with people. Hey, this is what it is. If this works for you, then that's great. But if it doesn't, I I don't want to be in the middle of, like you and your money where you feel like you put your money here and now you can't get it because I'm standing in the way. So
So just to clarify then, do you develop new properties? Are you buying existing properties? How is this working?
I do a mix of both. So I do primarily develop properties. We develop single family home subdivisions, apartment communities, townhome communities, and looking into industrial and flex space and retail at this point. But we also do buy existing properties. We've bought apartment communities before, but right now, we're not really seeing a lot of deals in apartments. And there's still a lot of people, hunting for deals in apartments. So we backed off a little bit on that unless we get, just like a screaming good deal. We've really been focused on manufactured home parks and RV communities over the last couple of years. So we've acquired a number of those. I currently have a portfolio of those. I think seven communities that we own at this point. Everything that we do is in the Austin, San Antonio markets, though, at this point. So all of our development projects are here. All of our existing projects are here at this point. I have invested out of state before, but ultimately it wasn't for me. I bought single family homes and small multis out of state when I was living in California. Didn't enjoy the lack of control and the lack of proximity to the properties. So when I moved to Texas, I made a conscious effort to kind of get rid of everything in my portfolio that was outside of Texas. Aside from my personal passive investments, I do have some passive investments that are out of state, but all of my active stuff is here. It's within I'd say a 2 or 3 hour drive of my personal residence, so I can keep a really close eye on it. I've also lately shied away from doing any projects where I'm not in control of the project, or or my team isn't, because I've seen some partnerships go south. Not really many of my own, but there's a lot in the news now of people that are kind of like, oh, I jumped on this project, I was a minor GP, the people that were in charge kind of messed it up, and I'm looking at that saying, ooh, I don't want to be in that position, so I'm not gonna do projects like that. So so all of our projects are they're nearby my home. It's a mix of existing and new developments, and they're all ones that I control or my team controls. So that's kind of our focus right now.
Well, a good partnership can make or break a deal in many cases. How do you find and pick those partners that you're talking about? It sounds like you're pretty selective.
Yes, earlier on I was less selective, as I was kind of trying to break into the space. Thankfully I didn't have any partnerships go like really poorly. Although there are people that I wouldn't work with again, but nothing that was kind of dramatic and crazy. But really, what I do is I will, I'll interview the partners. I'll try to get to know them. Talk about their track record, their plans for the future, where they're looking to go. Really try to get an idea for how they do business. What they value. Do they value people in relationships more? Do they value money more? Are they looking to to get rich quick? Do they understand that that it can be a slower game? Just those kind of basic questions to get an idea for, what is this person's motivation? What makes them tick? And hopefully, I can also kind of glean out of that, how are they going to act if stuff doesn't go smoothly? Because in real estate, stuff can go not smoothly, and that can, stuff not going according to plan can be something as simple as, there's a minor delay with the city up to, something super crazy where the entire project is going bankrupt and everyone's losing their money. I've never been in that position myself, but as a developer, I've had many deals where there's some delay for one reason or another, and knowing how a partner is going to react to that is very important. And so I try to vet those things out ahead of time. I mean, anybody can say anything in a conversation, and how they act in a given situation could be completely different. At this point, the partners that I'm working with are all people that I've done multiple projects with, and I've seen how they've behaved in different scenarios, and it's in a way that I like, that I feel that I can work with. Their values in action seem to line up with what they've said. I've seen them behave, well. And so therefore they're people that I want to continue to work with long term. And, other folks I've kind of, if we've had disagreements on how to handle things, I'll, shy away, keep relationships in good standing. I'm not burning any bridges or anything, but I will, kind of tell myself like, well, I wouldn't work with this person again. Nothing personal, just we don't seem to align on all of these factors. And like you said, a partnership can make or break a deal. And, real estate deals and developments are stressful enough without adding in, stress from partnerships or people not seeing eye to eye. So that's just not stress that I want in my life. I want to be able to focus on the deal and on the investors and getting everyone a return on their money instead of, infighting or anything like that.
Well, earlier you mentioned it almost sounded a little like you like to have as much control as possible. How has that worked out when you're talking about bigger projects? Would have to think that there's now a team element involved. How have you handled handing things over to other people and delegating some of those responsibilities?
It's definitely a team effort, and I think that knowing people's strengths and knowing what people are comfortable with, and also just trust that's built over time from people doing what they've been tasked with goes a long way. One of the primary partnerships that I have, there's three of us, myself included, and we each have a distinct role that we play. I'm 1/3 of that, so it's not like I'm directly in control, personally of any of the deals, but I'm 1/3 of that team, and we all have things that we work on in the deals. I'm primarily dealing with the asset management on the properties that we own, and I'm responsible for that. And, I can call my partners and say, hey, what's going on in this arena? Or, hey, I got a notification that this thing was missed, and, it gets handled. And same thing, they can call me and say, hey, what's going on over here? Or this thing got missed, or, whatever it is, and I'll respond. And, we just have a really good dynamic there. And so when you've got people in your corner that you've worked with before, that you trust, and when there's full transparency across everything too, that makes it a lot easier to delegate and pass things off. Like on those projects with that team, I mean, we all have access to the company bank accounts, all the financial reporting, every piece of information about the deal is accessible to any one of us, so that we can check it at any time. We can double check each other. If, for some reason we feel like, something's off, we don't have to ask anyone for permission. We can just, well, I'm going to go into the bank account, look at it myself, if I have any doubts. And just that level of, openness and communication, full transparency goes a long way towards building that trust between partners. And when you have that stuff, it's a lot smoother. And when you work with someone for a long time, you trust them more. If there's never been any reason for you to doubt your partners. For me, at least the partners that I work with now, I don't have any reason to doubt them. They've never given me any indication that I should doubt them, and all the information is at my fingertips to check if I need to, and I do sometimes, just to kind of make sure I recognize all the transactions, or make sure that I'm up to date with all the emails everywhere. And that's how I found to navigate partnerships, is openness and trust.
Trust but verify. That's
Exactly.
a good old adage, right?
Yeah, trust but verify, for sure.
So how has things progressed then? You're mostly in that particular market. Is there a particular reason why you chose the market you're in?
It's a mixture of personal and professional. I grew up in the Bay Area in California, but I'm not a huge fan of California at this point. I moved for a reason, high prices being only one part of that reason. And when looking for a new place to settle, I decided on Austin for a few different reasons. I have a lot of family all throughout Texas. My mom actually moved to the area before I did, and I have aunts and uncles and cousins that have lived in Austin since the 80s. I have other family members that have lived all over Texas since the 80s. one of my aunts, married a Hispanic gentleman who's from, down near the McAllen area. So all my cousins and kind of family have been there for a long time. So there was that personal reason that kind of drew me to Texas, knowing that I had a family network here. But also there's just a lot of opportunity in Austin. I mean, Austin it's growing. It's a major metro. It's the 10th largest metro in the country according to the 2020 census. It's located in the Texas Triangle, which is a booming economic area. Austin itself is booming economically. I know the headlines have been a little more negative over the last few months, but things go up and down. I don't have any doubts that Austin will continue to grow and be a place with a lot of opportunity for many years to come. So just that combination of personal connection here and also what I see as professional opportunity. It's a lot easier to develop properties in Texas. Austin and Travis County can be more challenging, but it's certainly far easier than in the Bay Area where I'm from. And a lot of the projects that I do aren't in Austin proper or necessarily in Travis County, but they'll be in surrounding counties that are a little bit easier to deal with. Texas is very business friendly and is very development friendly, which I think is extremely important to warding off a housing crisis. In the Bay Area, there's a severe housing crisis because they won't develop new properties out there, and all the NIMBYs, like to block any kind of development that goes in. There is some of that in Austin, but it's very little in the surrounding areas. I think people here understand that folks want to either live in apartments or single family homes, and cities and municipalities and the people in them are willing to allow those properties to be built. There's lots of subdivisions built, lots of apartments built, and I'm a firm believer that supply and demand is the only thing that is going to, making sure that there's adequate supply to meet the demand is the only thing that's going to keep housing prices reasonable for the average American. And consider myself to be, the average American. I certainly grew up that way. So I understand how disheartening it can be for young people, millennials like myself, that, can feel like there's no way that I'll be able to buy a home or have that American dream. It's certainly not something I was able to do in the Bay Area when I left about 5 years ago, but I have been able to find that for myself in Texas. And I take great pride and pleasure in being part of the solution there and in building housing for people that want it. So, yeah.
Just to remind everybody, irongallinvestments.com to learn more about how you can maybe get involved here, irongallinvestments.com. If you found some value in what we're talking about so far, do us a quick favor and share this with one of your investor friends. And if you're watching us on YouTube, give us a quick like and subscribe. So with all of that, it sounds like, would you say that the niche you're in now, it sounds like you're kind of dabbling in a few things, but it's a bit more new construction, maybe some newer properties, multifamily, maybe in nature. Would you have stayed on the same path if you had to do it all over again? Would you have jumped right into a certain investment strategy, or would have maintained the course and started where you did?
I guess that's a tough one. Lots of people will go back and say, "Oh, I would have just skipped straight to whatever step." And there's a part of me that would like to say, "Oh, I just would have gone straight into developing real estate." But I do think that those early experiences I had in buying, single family homes, small multis, I think that was, and then also my W-2 job that I had working as a stationary engineer were all very, very valuable in my personal education on how to be a real estate investor, be a real estate developer, because I started working in other properties, and I was able to start closer to the bottom in a role that didn't have the responsibilities that I have now, which was good because it allowed me to learn. It allowed me to I had certain mentors at that point that kind of were like, hey, this is how stuff works in large commercial asset management and in investing in these smaller properties. I was using my own money to do that, so I was able to to figure out how to underwrite deals for myself, decide what was a good return on investment, figure out the value for my time, assess the risks appropriately, because it was all my own dollars. And I think that prepared me very well to then be able to deal with large properties and other people's money, because I'd done it with my own money first. So I understand what it was like to go out and save, $100,000 of my own money and invest that into a property and try to make it work, and what it would feel like if that money was lost, or if somebody wasn't doing everything that they could to preserve and grow that money. I experienced that firsthand myself. And so I think that part of my journey was invaluable, because it allowed me to learn. It allowed me to feel what I would imagine my investors are feeling when they get, communications, whether it's a very positive communication of, hey, things are going great and we're overperforming, or, a less positive communication that's like, hey, we hit this, little snag with the city, and, we're delayed by a couple weeks now. I do think that there are certain people in the space that just kind of, jump in. They haven't ever invested their own money before. They don't, have any experience in the industry or an adjacent industry. And, suddenly they're in charge of millions of dollars of other people's money. They've never managed a large asset before. They're relying on, some property management company who aren't, their interests are not aligned. The property manager is trying to get their fee. They're not trying to protect the investor's investment, and I think that that's where stuff has the potential to go really wrong really quickly. So, I guess looking back, of course I would like to say that I could shave however many years off of my journey, but ultimately I think that those early experiences were very important. And if I had to, to go back and do it all over again, if I was going back to the knowledge I had then, I would probably do it the same way. If I was starting over right now, I would just go into development and keep doing what I'm doing right now.
Mm-hmm. Yeah, it's always easy to play those what ifs, right? And
Yeah.
That's a kind of a cop out question for me to even ask you. The one I would be curious, based on that, you mentioned you were in Austin and you fled California. You're kind of skirting around a couple things there. Do you feel like a lot of California people that are exiting are bringing some of their thoughts and politics with them, causing any issues, or is that just what you had mentioned earlier, just something we're seeing on the media?
I think it's a mix of both. I've seen a couple studies that actually show that people that have moved from California to Texas are actually more conservative than native-born Texans. They're leaving California for a reason, because they don't like what's going on there. And I've definitely met those folks that are, more conservative coming from California, at least in certain arenas. I also feel like I meet a lot of people that are more fiscally conservative, but very socially liberal. And, and that can work in some respects, but sometimes those two things are kind of counter to each other. I guess there's a certain vein of social liberalism that doesn't really, deal with, the financial aspects. If you're just kind of believing, hey, somebody should be free to, dress how they want, or, act how they want and whatever, as long as they're not infringing on anyone else, is very different than, hey, I'm socially liberal and that I want to, vote in a bunch of, fiscal policy that will then affect, other people. And I've met both. I'd say it's probably a pretty even mix. There are definitely people that are moving to Austin that, are, purely fleeing high prices and saying all I'm looking to get is a cheaper place to live. And, they're bringing, those very liberal values with them. There are other people more like myself that are fleeing high prices, but also certain policies, or, a certain trend that seems to be happening in California, where it's like, I feel like I can see where this is going, and I don't like that. So I think folks more like myself are, not really bringing everything with them. I'm sure that there's some elements of California. I mean, I still got my man bun here, so I brought that with me.
I wish I could say the same.
Well, I figured, I'm going to be 32, and I'm might start losing my hair at some point. So as long as I got it, I'm going to just grow it long and flaunt it while I can, because I might not always have it.
So, well, one of the things that I'd be interested in is that, based on everything you said, I have a lot of people that listen to this podcast. They're either sitting on the sidelines trying to consume a lot of information to make that first jump. For those people that are listening, what type of advice would you give them to maybe get started or finding the best way where their money can work their hardest in real estate?
So first off, it would depend on how they're looking to invest. If they're looking to just, invest passively, that's going to have a different answer than somebody that's looking to invest actively. If you're looking to invest passively, I would say, get connected with reputable people in the industry that have a good record, good track record, that seem to have integrity. Be very careful and really analyze that track record, because there's a lot of people that bought properties, I'll say, in between 2016 and 2021 that were able to achieve great returns, not because they did a good job in managing it, but because the market went up a crazy amount. So be careful. Really, ask for underwriting, ask for property performance, dive into those numbers and those operating numbers on the properties, and make sure that there were actually improvements made to the property, that the investor returns weren't achieved just because of cap rate compression or something like that. And don't hesitate to wait until you find the right team. That's what I would say for passive investors. For active investors, I would say get your financial house in order before you try to invest in real estate. How you do anything is how you do everything. So if you're really in debt and don't really know how to manage money and are just looking to get into real estate as a way to solve other problems in your life, maybe not the best thing. Maybe figure out how to get yourself on a more solid financial footing. Pay off your debts. Make sure you have an emergency fund. Make sure your family's taken care of before you start jumping into something risky, because real estate is risky. A lot of people kind of portray it as it's this risk-free thing and it always goes up, and sure, over 50 years it always goes up, but there can be dips in the meantime, or you can miscalculate something, or contractor could screw you, or the city could delay you in getting permits. Any number of things could happen that could really mess you up. So make sure that you're in a position where that's not just going to destroy your family. And you can start yourself, or I would say start with maybe some friends or business partners. If you own your own business, or you have other people in your circle that are also interested, maybe try to do a joint venture there, or a smaller thing. Get 2 or 3 people together that can pool some money and maybe have some different skill sets. Maybe if somebody, one of your friends or you are pretty handy with stuff and can maybe do some renovation work, maybe somebody else is pretty good with accounting and finances and stuff. Find those people that have complementary skill sets to you, and and start working on something. I would say don't necessarily jump into actively managing a $20 million property if you have no experience doing that. That can go very wrong very quickly, especially in the current environment that we're in, where deals are hard to come by, cash flow is hard to find, insurance rates are going up like crazy. There's fears of a recession and political turmoil and all of these things going on right now. You don't want to wind up in a position where you're stuck with a property that you don't quite know how to manage, that isn't performing well. You're looking at lawsuits from investors. Like, all those things can happen. So just make sure you know what you're doing, educate yourself well, surround yourself with good people, and and when you think that you've got the right deal, the right team, you've educated yourself enough, you got to pull the trigger at some point. So don't get stuck in analysis paralysis forever, but also don't jump off the cliff without a parachute. You got to find that middle ground, which is really hard.
You mentioned having a mentor. Did you have a mentor as soon as you started, or was that something that you incorporated later on?
Really, the the mentor that I have was he was my boss in my W-2 position. He was a stationary engineer that had worked in a lot of large commercial facilities. He'd worked in, like at Twitter's headquarters in San Francisco. He'd worked at a couple of major hospitals. The facility we were working in was a mixed-use commercial residential high-rise building that was 27 stories. And he taught me a lot about what it takes to manage those properties from an operation standpoint. All the equipment that is in there, the maintenance costs that can come up, things of that nature. We had 5 elevators in that building. We had a rooftop pool. We had rooftop gardens. We had 197 residential units. We had half a city block of ground floor commercial. We had 3 floors of subterranean parking, and we had a lawsuit that we were filing on behalf of the property. So I got a really in-depth look at what could go wrong, and that has informed me in buying properties. And part of the reason why I like development too, like I shy away from buying some existing properties because I'm like, ooh, I don't know what's going on behind these walls. I don't know if stuff was done correctly or incorrectly. At least with new development, I can see it being installed, and I know if it's done correctly or not. So I had, that mentor helped me with understanding large asset management. Other than that, I haven't really had mentors. I've had partners that have had different skill sets than I did, and I've learned from working with them, and then have also, taught them what I know. But haven't really done much with mentors. If I'm honest, I know there's a lot of mentorship programs out there. Unfortunately, what I've found is, there's a lot of people that make more money being a mentor than they do in real estate. And I'm not really interested in being mentored by somebody that's making their money from telling me what to do as opposed to doing it themselves. And then, also people that just don't necessarily have a lot of experience. I see a lot of people selling mentorship programs where they've done, a quarter of what I've done. I saw a guy that started a mentorship program, 2 months after he bought his first triplex. And I was like, I'm not paying you, money for, you barely, are out of diapers yourself. So I'm hopeful that one day I will find the right mentor. I haven't found them yet for everything.
Okay. Well, you've mentioned the partnerships a few times, and the fact that your partners kind of fill gaps where you might lack.
Yeah.
That's typically an exercise somebody has to go through and have this honest assessment of where you might need help. What did you go through to determine where you were lacking and what needed to be filled?
Well, I had an early deal that I had where I had self-financed this deal. It was my first, I guess, development deal, if you could call it that. It wasn't development, in the sense that I'm doing now with, hundreds of units, but it was just it was a property that I had bought to, it was a single family home. I was going to tear it down, build a duplex, in its place, and I got connected with, a partner there, and, he was supposed to, be the contractor, and, stuff really went pretty south. And, I learned there that, I had certain gaps in my knowledge. And I also learned how to, to vet people better, and also put, precautions in place with any deal, so that, you learn a lot from deals that don't go well, and I've only had a couple of those in my career, and those were both with my own money. So I learned those lessons myself. But, it's being honest with yourself is important. And I've had to do that with every deal that I go into, and after those early couple deals, it didn't work out so well. I made sure to, basically write out on every deal what every deal is going to need and who is going to fulfill that role. And then I try to find people to fill those roles, whether it's a partner in the deal or whether it's a professional that we hire. Like often we don't need entitlement assistance. We're able to, to handle the entitlement ourselves. But there's one deal that we're doing now that, we kind of identified right off the bat, like this municipality is a little more challenging to work with, and we're going to need somebody that is more of an entitlement expert than I am. ultimately I found that through an entitlements attorney that we retained for that project specifically. We filled that role with someone that we hired. Another project that I'm doing, it's a 330 unit apartment development. This was going to be or is going to be, I should say, an institutional grade asset. And it's going to have a very specific either funding partner or buyer for the construction part of it. And I knew that I needed a financial partner that understood the private equity model and underwriting for private equity far better than I did. Like I can underwrite, but I'll be honest, I'm not the best underwriter. Like I'm okay at it, but I probably couldn't get paid for it if I was gonna say that. So knowing that I needed somebody that understood private equity and that I didn't know that, I had a partner that I had been talking to for a couple of years at that point, and when that opportunity came up, I approached him, and he joined the deal as a general partner. And he works at a private equity firm and has done similar deals like that before. And after a couple of years of developing a relationship, I felt like he was going to be a good fit for the deal. So I brought him into the deal, and he's a partner on the deal. And he's, done the underwriting, which is far more in-depth underwriting, but is very necessary for the project. And he's spearheading the funding and financing for the construction and speaking with these private equity groups, which he's very well versed in because that's his daily job. So it's just, you have to be very honest with what you can do. I'm not a huge fan of the whole, fake it till you make it thing. I mean, I think that has its place. And I'll certainly say that I have, faked it somewhat at times, but I was also very, very confident that anything that I said that I could do, I could actually do it. Even if I didn't have the longest track record of doing it, I was completely confident in my ability to do it. Not out of, arrogance or anything of like, oh, I can do anything, but just like, no, I understand what it takes to do this role and I can, do that. But if you're going to do that, you also have to be willing to be honest with yourself and say, here's something that I might be able to figure out, but I'm not completely confident that I could if I needed to. So I'm not going to represent that I can do that because I don't ever want to be in a position where I've said that I can do something and, I just trip and fall on my face and can't do it.
Mm-hmm.
I would rather surround myself with the people that can than gamble if I'm not sure that it's a hand I'm going to win.
You mentioned learning a couple hard lessons, especially around distance investing. Do you mind sharing one of those stories?
Yes, one of them is that if you don't have a really good network set up for being out of state, you're in all likelihood going to be taken advantage of by everyone in that market because they know that you're not there and you cannot verify it yourself. Now, if you have really strong, boots on the ground, people that are on your team, not, like, oh, I've got a good contractor with boots on the ground and he'll take care of me. I mean, I'm sure that those relationships exist. I wasn't able to personally find those or develop them in the way that I wanted. So, I mean, that is a risk in distance investing. One of the things that I saw from the very successful people that invested out of state was they spent a lot of time in each of the markets that they were investing in before they even bought a single property. They would spend 1 to 2 years, flying out there every month or two, meeting with people, really developing a team before they even bought their first property. That just wasn't something that I could do. When I first started investing out of state, I was living in California. I had, kind of just graduated college. I was married. I had stepkids. So I had other responsibilities. I was making okay money at my job, but I was living in the Bay Area and it wasn't, that much. And, I had limited vacation time. I had a week of paid vacation every year and a week of sick time. So I couldn't afford, every month to be taking, a couple of days off to go fly to some new market, pay for airfare and hotels and rental cars and all of that stuff. I didn't have the money and I didn't have the time. So, my out of state investing, wasn't as successful, I think, in large part because I wasn't really set up to do it successfully, or I didn't set myself up to do it successfully. So that was one of the things. The other thing, and this, I learned this in distance investing and also just investing in my own backyard, is always make sure that you are underwriting everything to market. I think that was the single biggest lesson that I learned. Whether you're remodeling or building new, make sure that your numbers are underwritten to market, because there are a lot of people that will come in, whether they're contractors or property managers or whatever, and they will say, I can do this thing for way cheaper. Oh, I know that the market is building this thing at 150 bucks a square foot. I'm going to build it for 110 a square foot, or whatever it is. Oh, everybody else is saying that they can market, or that they're it's going to cost them $10,000 to do this renovation. Well, hey, like, if you give me a cut of the profits, I'll do it for $5,000, or whatever thing it is. And that might well be true, and maybe they can do it. But if something ever goes wrong in that partnership, or for some reason they can't deliver on what they said, and you then have to turn around and fire that person and go back out to market, if you've underwritten a really low number and you need that really low number in order to make the deal work, you're going to wind up in trouble. Ask me how I know. I did a deal where I trusted my partner who said he could do it cheaper, and he couldn't, and he messed it up, and I had to go find somebody else to come in, and they were like 30% higher, and the deal got messed up and lost money. So these days I always am really conservative in at least my renovation numbers and my expense numbers. I make sure that everything is at market, and if somebody comes in or wants to partner or whatever, and they say, hey, I can do it for half the price, or 30% less than that, or whatever, I mean, hey, that's great. If you can actually do that, that just means we're all going to make more money. I'm still underwriting it at market.
Sure.
So I would say those are my two biggest lessons from distance investing and just investing in general.
Well, let's move into a high note. What's been your biggest win so far?
I would say my biggest win, well, I guess in terms of like projects I've done, or
Yeah.
I have, let's see, biggest win. I guess I've got a couple. I've got an apartment development that I'm doing right now that is coming along really nicely. We're not completely done with it yet, but it's we should be done in the next 3-4 months, and it kind of continues on the same trajectory. It will be an extremely profitable project for all involved. So I've been enjoying that. It's also been a very easy project. We did our research really well, and I've also gotten compliments from certain contractors that I've talked to about the design on the buildings. I have an architect that's done it, but someone under my direction. So I'm pretty proud of the design that my team was able to put together, as it's a very efficient design that we really like. The project has gone very smoothly, so that's been a big win in my book. The other one is, my partners and I were able to snag a really nice RV park out in Dripping Springs, Texas. We got a great deal on it. Came with a lot of vacant land, so cash flowing from day one and going really smoothly. We're going to double the size of that park. And it was just a screaming good deal that we bought. And once we finished that development to double the size of the park, it should be, again, another big win for us and our investors. So I think those are the two projects I'm the proudest of at this point.
Well, just to remind everybody, head over to irongallinvestments.com. Learn more about his team there. But Andrew, this has been a fantastic conversation. But before we move into the rapid fire questions, is there a question or concept you wish we would have covered here so far?
Not really. I've just enjoyed the conversation. It's been fun.
So first of all, here's the first question. What lie do real estate investors tell themselves and sometimes to others?
That you can't lose with real estate, that it always goes up and is just completely safe and there's no risk.
Yeah. Do you have a book recommendation, or what are you reading right now?
What I'm reading right now it's actually books on just business in general. So I'm kind of into the entrepreneur operating system books. I've been reading Get a Grip and Traction. Both of those, I'm kind of reading them at the same time. So that's what I'm reading right now.
Those are great books.
Yeah.
What is if you could go back in time and give your younger self one piece of advice, what would that be?
It would be that there's a lot more that's possible. So don't worry about if it's possible to, like, that's not phrasing that very well. It's more like, don't be afraid to look into something because you think it's not possible. Now, it might not be the thing that, you want to do, or it might not be something that's feasible at whatever stage in life that you're in, but don't ever think that it's just like, I'm not even going to bother looking because I just know it's impossible. I feel like too many people fall into that. I myself fell into that coming out of, the Bay Area, where housing prices were really expensive, even from when I was a kid. For a long time, I just thought, I'm never going to be able to own a house. Like, that's just what it is. And I know a lot of other people my age feel that way. But, thankfully, I married somebody that was like, no, that's bullshit. You can absolutely buy a house. It might not be that house or at that time, but, don't just think it's impossible. Like, come on, let's, figure out a way to make it possible if it's something you really want.
Sure. What single strategy, process, or tool have you implemented that has had the biggest time-saving impact to your business?
Oh, that's a tough one because I'm not super efficient on time-saving strategies. But I guess I would say probably utilizing a project management software. I use the Zoho suite of projects. So I have like the CRM and everything, but I also have the Zoho project manager, and I've been implementing that slowly over the last little bit, and that's really helped because I can outline all of my projects. I can outline all of the action items, create Gantt charts for every event with due dates and everything. So that's really helped to streamline stuff and keep me better on task and more efficient, which is needed because I have ADHD. So I sometimes get a little scatterbrained and forget stuff.
Well, just a reminder, one last time, irongallinvestments.com. I really appreciate your time. This was a great conversation, Andrew, and I hope we'll talk again sometime soon. It was great meeting you.
Definitely. Thanks, Jack. I appreciate it.